So moving on. Okay, rejection blocks. And how do we draw them? What are they? What are we looking for? We're just going to scale back to a random time. Just do like right here or something like that. I don't even know when this is. Probably Friday or Monday? Monday. Okay. So I didn't go back that far. Okay. To make these rejection blocks, again, we're looking for 3 types of rejection blocks. Rejection blocks off of CISDs, or rejection wicks, I should say, off of CISDs, rejection wicks off of fair value gaps, and rejection wicks off liquidity sweeps. Rejection wicks off liquidity sweeps are more often the scarier one. Rejection blocks off of fair value gaps is the most common one. And I think rejection blocks off CISDs are the best ones. So if you want to like add that to your sort of like your notepad or whatever, I think that CISD rejection blocks, if I had to guess, play out the most. And I don't have the actual data on this because I just group rejection blocks into one. I think that I have the most success with CISD rejection blocks. I think that I take the most CISD fair value gaps, and I think that CISD or rejection block liquidity sweep are the scariest ones. And they're the scariest ones because, for example, let's say this is your liquidity level right here, the Asia high. You're basically putting that rejection block at the top of the market with nothing above you. So market has all the room in the world to run higher. And you're saying that the rejection here is going to push you down, right? So you're basically guessing, quote unquote, the top. And that's why it can be a little scary. But if we go through, okay, right here, this is a wick into a fair value gap that rejects, lowest wick. We'll see if it plays. And we're going to keep track of this up here. We're going to do like a little scorecard. It's going to be like a back testing session almost. W, L. And we'll just put like tallies under each one. So this is our first rejection block. And I was not trading, so I have no clue what happens. Oop, my position on it. But I think everyone can probably see why it's a rejection block. We have the fair value gap. This is close enough. The fair value gap that gets rejected. It's literally what it is. And if you wanted to add like extra confluence, there's like a -6 right there. Again, I'm personally not worried about that. But if you were worried about that, and then same thing here. This is not a rejection block because there's nothing it's rejecting. Maybe you could argue it's rejecting the inverse fair value gap. I don't put rejection blocks on inverse fair value gap, so I'm not worried about that. So right now, this is this and this. So this is another good example, actually. What level is it? 8, 3, 5. Okay, we'll just see what happens. Just put a finger on it, though. So right now, I don't see, because this is partially all-time highs, I think. Maybe I'd have to look left. But I don't really see anything from a bearish rejection block standpoint. Let me look left. Yeah, I think that's all-time highs. So let's see if either one of these hold, or if we make other rejection blocks for that matter. Okay, let's see. We have all these bearish fair value gaps. This bearish fair value gap, what is 15-minute fair value gap? So let's go here. See any 15-minute fair value gaps. So I think that was wrong. This is a 15-minute fair value gap. So if we put a wick into this, we would look for a potential rejection block. But we didn't put a wick into it. We just traded right through it. Notice that. And again, no bearish rejection blocks up here. So we're still just trading up. We start this move lower, but we have not really wicked into and created a rejection block yet, but we are coming up on this one over here. Now this, I would argue, is a rejection block. This looks like a news candle. So this would be an L, but it's a news L. I mean, I'll still mark it as a loss, but that's a news candle. But wait, let me go back and just show you what that rejection block was. This might be a little too internal. And so when I say internal, right, you just think about the range. It's inside the range versus we talk about external, right? This is outside of the range. This being your range. Like if you were to draw a 705, for example, where would you draw it? You would draw it from here to here, right? This would be your 705 for the day. First of all, you can see right here. Again, it's a news candle, so not really a good representation. But let's see, this is 919. 908. So I think 1540 survives. Yeah, 1540 survives. And so this is a good example of a 705 that works. The reason that this this rejection block doesn't work is because it's internal, right? You have this internal range where you're in a downtrend and then you're trying to take a rejection block in the downtrend. A lot scarier, or it's a lot less likely to take the rejection block that's in the direction of the trend rather than a pre-existing rejection block that you then go and take. Anyways, so this would, if you were trying to just draw the rejection block, right, this wick into the fair value gap would be the move. But obviously you can see we're hitting this bullish 705 internally. And that's what I mean by internally. You're in this range of these two, this kind of move, or not this move, you're in this move's range. So you're internal rather than down here, which would be considered external. But look at the way the 705 works. Again, partially that's a news candle. So just don't worry about that too much. But what we do, look at this rejection right here. Well, this 5-minute fair value gap. So you could draw that as a rejection block. And this is more external, right? Because it's bearish from the top of the range rather than bearish from the middle to the low end of the range, right? You want to be bearish from the top, bullish from the bottom. Anyways, continue this. Let's see. I want to see if either one of these work. Oh, this is the 705. Delete that. Oh, wait. We go into this rejection block right here. Oh, this was the 6 o'clock one. So, yep, this is an example of a rejection block working. And then, again, for our purposes for later, this creates a rejection block, so whether you trade that or not. If you had a sell limit on it, obviously you would have gotten filled. Then you would have been going downhill, and you would have hit 40 points without getting stopped out. Okay, look right here. We just got filled on this rejection block from way long ago. We got about, what is this? We got filled at 893. This is 884, so about 7 points in drawdown. Let's see if it goes up. Looks like it stops us out. Okay, so we'll add another loss. So we're 0 for 2. Well, I guess 1 for 2 because that one at open worked. Okay, so far we're 1 for 2 on this strategy. But if you do 15 and 40, so you're up net 10 points. This one did not work. You have this one down here. Let's see if this pushes price higher. Okay, you're now filled, and that one works. So now you're 2 for 2 on rejection blocks. And technically, you're actually not, because the one that was internal, I would never take that. So I don't want to even use that as a possible trade. So you're 2 for 1, 2 wins, 1 loss. This is 80 points up, 15 points down, net 65 points. Do we make any other rejection blocks? Let's figure that out. So here, this was the rejection block, and we rejected it, basically hitting the level right here, and basically holding this rejection block, creating a new wick, which therefore creates a new rejection block. And because it's also on the external side of the range, it's a good trade to take. And so this one is at 835. Let's see what happens. This, okay, right, this looks like a rejection block, but look, we're in a bullish trend. We're not going to go and take the bullish trend and then try to reject block here, right? Again, you're taking bullish trend from the middle. Take bullish from the bottom, bearish from the top, and you stay out of like the middle fair value gaps. Right? And that's a perfect example of when that one doesn't work. This one does not work. So now you're 2 for 2. And you're up a net 50 points. And now let's kind of assess the market because we've gotten a little sloppy through here. Let's see if there's anything else. Here's your new week opening gap. I don't think we ever even get close to that. We'll just mark it out. Okay, so right now it looks pretty bearish. We have all of these bearish fair value gaps. We have this bullish fair value gap. Let's see what happens. You're not really looking to trade right now. Like, what time is this? 8 o'clock on Monday. You're not looking to trade this price action. So 8 o'clock last night. Oh, so this is the 776 level I marked out. And what are we rejecting? If you think about it, right, look at the 15-minute chart first. This will give you the better example. We are rejecting this 15-minute fair value gap. Traded into it, traded away from it. And so here's an example, right, where this would have been a banger. It just didn't get filled. Right here, did not get filled. And in theory, you go down to the 5-minute, this, right? You just don't get filled on this move down, but it definitely rejects, just not enough for us to get filled. But again, I'll just go back and show the reason why I marked that out. 15-minute fair value gap, hourly fair value gap, this candle, and this is the hourly fair value gap right here. You can see this whole thing is an hour fair value gap. 15-minute candle rejects it. You just scale down to the 5-minute. That's your rejection block. Spike up, whatever. Okay, get stopped out. So again, in this scenario, you're now 2 wins, 3 losses, and you're still up a net 35 points, which is crazy, right? You have a losing, you're below 50%, and you're up net points. And this is why sticking to the system matters so much.
Cameron, can we say something?
Yeah.
I don't think it can be understated what you're saying right now, and that was a big problem for me for a long time. If you stick to the system and take your losses and take your stops, if you have the ability to set a stop loss, not move it, not add to losing positions, and let the winners win, even with a losing record, you can still be up. It's incredible.
Yep, that's the whole thing. Again, like, that's why I say the trading strategy matters so little, and it's more about the risk management. And by risk management, I mean letting winners win to a certain number and letting losers lose to a certain number. And that number being, again, for me right now, I think in the current market conditions, I think that 15 and 40 is the sweet spot. That's what I've been doing, right? It's not like the history of my trading is at 15 and 40, but right now I think it's the best spot to be in is 15 and 40 based off my sort of data, my numbers. Almost all of my winners get to at least 40 points, or all of my trades that, get that initial push go to 40 points almost. So why not just cut it there? A 40-point win is huge, especially when you compare it to a 15-point stop, right? It's about 2.7 RR. So in theory, as long as you win for easy round numbers, we'll just call it 30% of your trades. So you win 3 out of 10 trades, you can literally be a profitable trader on 3 out of 10 winning trades. And again, you'll probably see we're going to win a lot more than 3 out of 10 trades. So, yep, you're absolutely correct. So again, we add that to the losing column, and then we'll just keep going through. Nope, I knew what you meant. I knew what you meant. So again, pre-market right here. Look at these wicks that are getting thrown right here. And so I want to explain, this is internal right now, right? So if price came down right now and touched this range, I would not trade this, right? And this wouldn't be marked out either. But this is where some of the explanation, internal, external, needs to be explained. Once you go and break this high, this now becomes an external part of the range. I don't know if that makes sense at all, right? You're internal because this is your box. Oh, sorry. This is your box on this leg of the range. So this is internal. But then you make a new low and bust up a new high, right? So now this is your range that you're currently worried about, right? So this is now the external low once you break this high. So once you break this high, that's when you draw out this rejection block. And again, it's inside this 5-15 hourly fair value gap that we already talked about, which makes it great. The other thing that makes this one great is if you go to the 15-minute chart, look what happens. And this is where it gets tough, right? So I started actually drawing this one on the 15-minute chart. Let me tell you why. Look at the CISD that gets made right here. Right? We talk about it. Downtrend, engulfing candle. In theory, if we were just trying to CISD entry, we would have entered right here at 854. We would have been stopped out. obviously speaking. Unless you let it the first candle pass and then use one of the second candles, in which case you would have taken an insane trade, which is usually what I recommend, but either way. So really, this is a 15-minute rejection block off of this CISD. But it also rejects the fair value gap, which means you have a double rejection. And so you draw it on the 15, and then like I always say, you scale down to the 5, and that way you have the tightest range possible. Why is my mouth glitching? Take this down to there. So 829 or 830, whatever you want to call it. Thought it was 829, but we'll just call it 830. And then again, we have this right here. What's this? Right, so 6. Okay. And again, so now we are external. We've made a new range because we've broken new highs. Here's our 5 and 15-minute fair value gap. We clearly show rejection. This is the pre-market trade that I took. This is what I would call like a cheap trade, right? If you want to trade this rejection block, in theory, you really only need like a 10-point stop probably. If this isn't market open because of how small the rejection block is, and you might not look for 40 points. This might be more of a scalp-based entry because you're at the top of the range just looking for a quick push, right? If you were just looking for a quick push and you did 10, 20, 10-point stop, 20-point TP, that would have worked. Or, of course, as more often I recommend, but I know some of you guys like to scalp, which is why I said that. I really probably would never have done that. I would always stick to my 15 and 40. And it just sucks that it was at market open. However, because I didn't have a lot of accounts, I let it go at half size, and it works great. It then literally the same move that moved down is what wicked into this one. So I took back-to-back wins, and then it went up to my overarching level, 876, wicked into it, and then that one. So it was a crazier morning for me, but literally all 3 levels are marked out using the rejection blocks. Simple as that. And then, so right now, this is, again, just to re-clarify one thing. When you come down here and get filled, it's filling this rejection block. So you can, in theory, move this, and say, you know what, I got filled here. And so I think some of us might have a tendency, and I think this is the problem that I have with the indicator that most of you guys are using. I think right away, the second it does this and rejects, it puts a rejection block on this level and says, look at the rejection of the rejection block, what we were calling like the camera rejection blocks. This is not, and I was joking, right? This is not an actual rejection block yet because it's inside of the range, right? It didn't make a new low and we're coming down from the high. So it's internal on this range. So it can't be a rejection block yet. However, once you break this high, this is now a rejection block because now it's the external part of the range. Yes, you have this below you, but this is now an external level because you broke the highs. And so this one was a quick trade, right? You got your 40 points and then it jumped right away, jumped straight up. And that obviously, taking shorts in the aggressive uptrend that we're in, you just want to be super careful on that. But I actually do want to see if this holds because we saw that big move down. I'm kind of curious to see if this held on that big. I know we also had the 705, but for my research, I want to see if this held on the way down or if it even got touched. Did not even get touched. Okay. But right there, if you just take those 3 wins I just took, then you add those to our tallies, right? You suffer through 3 losses, yes, but then you get that 5 wins in a row. 5 times 40 is 200. And then 3 times 15 is 45. So 200 minus 45, 155 net points on 3, 5. So 8 trades and you make 150 net points, 155 net points. I think that's pretty good. And again, right now, this is not a rejection block because it's internal, right? Until we break these highs, this is an internal level So not a rejection block. And let's see, out of curiosity, I wonder if taking profits or the rejection block indicator has it as a rejection block. See, it does. Look, it has this one that I have marked out, but it also has this one marked out right here. So if you do this, look, it has this one marked out too, which means it would also have had the couple ones that we said lost internally over here. So all of a sudden, instead of 3 losses, you might have 5 losses. And again, maybe 6 losses if you're taking this rejection block. So you can use the indicator. Just make sure that if you're going to use it, you have to do your own research and make sure that the one you're taking is external. Again, what makes it external is if it's a bullish rejection block like this, the move that made it has to break highs, right? So this move has to break highs and then it becomes external. Right here, this is the perfect example. This is a rejection block, internal though, because we didn't break the previous lows. Of course, we made these lows, but we didn't break the previous lows. So this is an internal rejection block. And look how, right, you just saw it had one right there, and then it moved it. And then it had one right there, it has one right there, and now it's probably going to just get rid of it because they're failing. They're failing because they're internal, right? So if we go back and almost back test the indicator, look, it has a rejection block right there, internal rejection block right there. And I bet it had one right here too. We go back even further. Well, I don't know. I shouldn't say that. I bet it does. I have no clue what it marks. I don't really have any confidence in what it marks. Okay, so it didn't have one right there. Never mind. Oh, whoa. Did you guys see that? Actually, that's annoying. I think it marked one, a bullish rejection block right there. Yeah, look, it marks a bullish rejection block right here. That's as internal as it gets. That would never work. And as you can see, it doesn't work. And then it's marking these bearish ones internally along the way. Stupid. Look, it has this one marked right here. Internal. Obviously gets blown through. It had this one marked right here. Internal gets blown through. It has this one marked internal. Probably will get blown through. And I guarantee when we come back down to this, I would assume this is internal. Or this is internal, and I would assume it gets blown through. And even if one of them works, right, every blind squirrel finds a nut, blah, 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 blah. Stick to external rejection blocks. And again, that means on a bearish move, like on this move, to have a rejection block, for this to be valid, price would have had to come down here and break this, or at least retest this rejection block, right? This rejection block got left untouched, which almost leaves it as like a draw on liquidity. And so anything that gets made on this move, in my opinion, is fraudulent. Same thing with this until we break highs, right? If we break highs and come down to this, then you can take it. If we stop here and come down to this, I personally would not take it because internal, not external. And from a internal versus external really just means internal is kind of the range where you're chopping. External kind of means you're sweeping liquidity. And of course, we've talked about liquidity being what moves the market. You coming down here into this rejection block, think about how many people probably have their stop losses under these lows, like right here, right? That's kind of the way we trade too, right? It's a good way to trade. I'm not talking bad about it, but all those people that have their stop losses right here on this move up, or they traded right here on this move up and they have like their break even or whatever, that's a bunch of liquidity flooding the market, which then allows for hedge funds and blah, blah, blah to get long for here, which is the external range, the lowest part of the range. And so they get a premium entry to go long, bam, and then obviously vice versa for shorts. It's going to be harder to find the shorts right now. Back 10 stage just because we're in a violent uptrend and making higher highs and higher lows. And higher lows, again, mean that your longs or your shorts are staying internal.